Ozan, there is so much going on. I don't even know where I want to start with you with this interview. Maybe let's just start with that looming deadline, the tariff day, April the 2nd. How difficult is it to construct a narrative with any proper conviction, given we're sort of living day to day by what the Trump administration may do or may not do with these tariffs?
Well, good morning from London, Jumana. I must also say that Mario Draghi is quite a tough act to follow. So we have a lot to talk about. If you take a look at the looming deadline in April 2nd, I think this is just one phase of the new world that we need to get used to living under, i.e. tariffs or the threat of tariffs is just going to be the cause of volatility across the markets, whether it's copper, whether it's secondary sanctions on Venezuela, whether actually it is some sort of a deal happening with Russia, Ukraine, which will actually potentially end up bringing Russian crude back onto the market within commodities. I think the name of the game is volatility is your friend. And if you're trading volatility and if you're long volatility, you have opportunities. But risk is becoming more and more difficult to price.
Yeah, well, thank you for the reference to the conversation that I had with Mario Draghi earlier. Maybe let's just pick up on that, because I obviously did pose the question to him about how much of a game changer Germany's defense spending plan is. And he said it is actually a game changer, but it's not the panacea. It's not going to be the solution to all of Europe's problems. There's still plenty of other reforms that need to take place. They need to also keep their focus on the single market. Do you think, therefore, that the rally that we've seen in European equities this year so far will at some point run out of steam if it's not accompanied by further action at an EU level?
I think, absolutely. I think we will look at a much more stringent differentiation between different markets within the EU, because not all European countries are equal when it comes to this new landscape that we are operating under. For example, France potentially will positively decouple compared to, say, Germany because of their more intense focus on AI and technology. The fact that they're much more energy independent, whereas Germany has a much higher hurdle to try to overcome. Also, with this European rearmament fund starting at 150 billion euros, France and French aerospace and defense companies are a much bigger beneficiary of that than some other countries and some companies. I think the name of the game, Jumana, is that, and as Mario Draghi has laid out on his report last year, one part of the challenge is finding the capital, finding the budget to be able to invest in European innovation and now defense. But the larger challenge potentially is to be able to overcome the European bureaucracy and the lack of coherent decision-making that is applicable to all of the EU nations at a time where we need to have a much more single-minded approach towards policy. And I think on that part, Europe is going to find it very difficult to implement policies that is appropriate for this point in history.
Yeah, it's interesting. We touched on that as well, and that, you know, with the progress or lack of progress of the Capital Markets Union, essentially it boils down to the fact that you have to have unanimity, and there are smaller countries that had been vetoing progress on that front. So it comes down to decision making. Let me ask you this: if we do get a ceasefire deal this year between Russia and Ukraine, first of all, is that your expectations? But if we do, what do you think it does to Europe's ambitions on defense spending? Will it sort of remove the impetus for them to go so big fiscally?
First of all, we may get a deal within this year. I think we are still far away from a deal, because if you take a look at the stipulation from Russian side in terms of what it takes to have a deal, you're talking about including Russian banks back into SWIFT. Again, it needs European approval. You're talking about bringing agricultural trade and potentially a flow of Russian crude back into the market, which are quite large items to try to overcome. So will we get a deal? No one knows, but I think it's plausible. Will this change the need for Europe to arm itself? Absolutely not, because it takes much more than just capital to create an army. It takes time, money, but also technology. And I think this is an area where we also should be focusing more as investors. We just heard about the impending AI diffusion rules in the US coming on May 15th. That is quite a big game changer in terms of which countries are able to utilize the high-powered chips. And given the importance of AI in warfare as well, I think it is very premature to say that Europe doesn't need to spend on defense. I think it's quite the contrary. I think European Union needs to spend, and also spend very wisely on defense, Jumana.
Yeah, Ozan, just to round up the discussion, the past few weeks we've seen several not positive developments in the Middle East, flaring up of tensions. Once again, Houthis obviously back on everyone's radar after the revelations yesterday. But do you think investors are being complacent about the geopolitical risk that's emanating from the Middle East? And could we see a flaring up in that part of the world in the second half of the year?
I don't think investors are being complacent, but I think investors are finding it difficult to differentiate in terms of what part of the Middle East we are targeting. I mean, you just witnessed Saudi Arabia host a very high-profile kind of forum to try to help defuse the Russia-Ukraine war. At the same time, you have GCC countries, again, particularly the UAE, that is really taking significant steps, especially vis-a-vis AI technology, the use of blockchain, tokenizing real-world assets. So therefore, there are different pockets in the Middle East that will attract investors' attention. It's just that on the whole, I think we are going to witness a prolonged conflict within the region and within the wider region going forward. It's very difficult to have a one-size-fits-all approach to investor sentiment in the Middle East, Romano.
Yeah. Ozan, always good to have you on. Thank you so much for getting up early for us. Ozan Ozkirol, founding managing partner of Tanto Capital.